So a bit of reprieve, despite the fact that we had U.S. retail sales stalling in the U.S. Do you think sentiment is back, good sentiment on the markets?
No, I think it's more relief, Susan. As you say, there's two real issues that we've been focusing on. One, after the market sell-off in August, could we have a double dip in the United States? There, I'm somewhat encouraged that no, the economy is still expanding, but it's very tepid at 1% to 2%. And I think the retail sales numbers is in line with that type of a view. So the second thing, though, is that you worry about is, well, can there be a mistake or a shock? And quite clearly, everybody has just been fixated on Europe, where the situation got worse. And in particular, I think it was really when we started to see the sell-off in the European banks, which is, just kind of been shocking how much they're back down to their levels of 08, 09. So I think what we got was what we should have had a lot earlier, the Merkel and Sarkozy reassuring you that they're not going to kick Greece out anytime soon. But there are a lot of problems ahead. So this isn't that declare victory, the problem's been solved. This is just the worst isn't about to happen anytime soon.
Okay. Is that in reaction to the European news? Is that what you're saying? We're just getting a papering over and the worst in Europe is not going to happen anytime soon?
Well, what I'm saying, Susan, and right now we're fairly neutral on the U.S. stock market because we believe that stocks are reasonably valued. We don't think they're super cheap. But we worry about the strong earnings. I've been a bull on the earnings front, and the real question is, can that continue if you have a very soft economy? The thing I worry about the most is if I could be confident that the problems in Europe were being addressed, then I'd say, okay, enough bad news is priced into the European markets. My problem is that in Europe, it's more difficult than the United States. Look at our difficulty over the budget with two parties, one government. In Europe, you've got 17 governments, and it's just much harder. And so I think that uncertainty is going to be with us for some time to come. And that's what holds me back.
Okay. What will make you get back into the markets, in size here? Are we still waiting for QE3, which might happen next week, considering we have this expanded, Fed meeting taking place in September?
Yeah, that's a good question. I think on QE3, that would be a positive for the stock market because I looked at data just today, Susan, for the launch of QE1 and 2, and it was the catalyst for a market rebound. That said, I still think that the Fed isn't going to announce that next week. I think it's, as your commentator indicated, we still have inflation higher than the Fed feels comfortable with. The FOMC is not in agreement, so I think they hold that in their hip pocket. And I think the more likely announcement is this Operation Twist, where they may go out and buy longer-dated treasuries. So that will have a little bit of impact, but I don't believe that's a game changer for the stock market.
Okay, well, that seems to be the consensus view out there of this Operation Twist coming from the Fed. Nick, let's talk more on Europe and specifically a solution here because, we had this conference call between the Greek, the French, and, of course, the German leaders, and they came on saying that Greece is not going to exit the European Union. And then we heard Merkel saying that there's not going to be a disorderly default. But do you think markets and have you priced in an eventual Greek default of sorts?
Oh, absolutely. If we look at credit default swaps, and Susan, they're pricing in 99% probability of a default in the next few years. So that news is priced in. So to your question, what would it take to give me some confidence? I would say I'm a realist. I know that they can't change things overnight. But I think that they do need to move to this concept of a Eurozone bond, where, in other words, that countries would be able to issue bonds that would have the full backing of the Eurozone, because then the whole Eurozone is solvent, but you have some problem countries. But I think that the second thing they have to complete is the enlargement of their special facility to provide potential capital to the European financial system. So those are the two things that would at least tell me, okay, they're doing the necessary things they have to do to restore confidence.